Good afternoon, traders. This is Tony D from easyMarkets in Sydney. Little update for today. We've got a bit of a apprehensive mood in the markets as there's a few things in the background that are causing the risk-on rally to be a little hesitant from pushing to fresh levels here. So the big thing that's happening is that at any moment we could have news regarding the US, France, and UK's reaction to Syrian chemical attacks over the weekend. UN resolution was vetoed by Russia last night, but Trump has cancelled his trip to South America later this week, and he's could get some sort of reaction as soon as today in terms of military strikes. Now, that would generally be negative for risk, both stock market and the more risk-sensitive pairs like dollar yen. So dollar yen, while it has a very good picture in terms of the US trade war with China backing, slowly getting better, with China giving a bit of appeasement overnight. What you're seeing though is that the market's just sitting here at the 107 level, and the rest of the dollar in the risk-on environment is getting sold, and the dollar index is back lower. But that can change pretty dramatically if there was a bigger than expected Syria strike or ongoing Syrian strikes. So that's a concern for the short term. If we get past that and some sort of information is given today, and we do know where the US and France and UK sit in terms of intervention in Syria, and also Russia's response and Iran's response, then you want to be focusing on the next big event, which is the US CPI tonight. Now, the US CPI is the inflation data. The inflation is what all central banks are all about, including the Fed. And the strength of the inflation data is really what's going to be driving the speed of rate hikes this year in the US. And so the chances that we do get 4 rate hikes instead of 3 rate hikes this year does require a strong CPI number. In terms of the CPI numbers expected, it is month-on-month numbers, and the month-on-month expected to be flat, 0.2%. And generally, because it's month-on-month numbers, it comes in 0.1 or 0.2 to get you 2% per year on average. So look, there is some variation, but not huge variation. Might miss by 0.1% or so. Look at the the core CPI numbers at the same time. They're the ones that take energy out of the equation, so they're actually viewed a little bit more as important for core inflation, and that is also taken a bit more into account by central bankers. So a stronger core CPI would probably counteract and beat a soft CPI number. So that's if you see any discrepancy between the two, always err in favor of core CPI. Now, it has the potential to move the markets a little bit, but the bigger thing in the backdrop is that the trade wars are easing, and so if we can get past Syria, then the risk-on rally is the main way to be playing this, which is long Aussie yen, long pound yen, long euro yen, long dollar yen as the preferred way. All right, so for those traders who are sitting and waiting on the sidelines, just keep an eye on the Syria news. If the market doesn't react, then that's your key to look to get back in with the new trends. Dollar index, if we are going to continue to go lower and there isn't any sort of reprieve here for the US dollar, then the 88 level, 88.20, it's been holding for many months, and we require that to break to get the next levels higher for the euro and the pound. In terms of the euro overnight, big moves coming through in Europe as one of the ECB members, noteworthy, he's saying that ECB is going to be ending QE this year. Not a huge surprise, a little bit of a shock given that that's not really said so explicitly. You did get a rebuke from the ECB itself saying that he's just one member and nothing's been decided yet. Obviously, Draghi was upset by such a direct comment from one of the ECB voting members, but that the damage was already done and the market has spiked to the high 123s, and we're still holding those gains. So the euro it was always in a holding pattern, given that its long-term trend is still higher, the normalization is still happening, and eventually over time market will talk about rate hikes, like they are talking about rate hikes now for the UK. So on May 10th, likely to be a rate hike in the UK, and that's providing constant backdrop support for the pound on any dips here. along with the US dollar weakness, and it potentially has a lot of room to move, given that the Brexit deal has been in place. You can see the bigger levels of resistance around the 143 are in sight, and above that you don't get too much resistance to 145 up to 150 on the longer term time frames here. So pound is one to keep an eye on. It's creeping higher. How you play it depends on the risk mood of the market. So pound yen when things are good, and if trade wars begin, then pound Aussie is the best way to play it. But when things like today are very good, but with a little bit of hesitation, yeah, then pound yen seems to be the way to play on dips at the moment. Alright guys, if you want to have a deeper discussion and look at some of those other crosses that are in play, do come through. We can talk about your favorite pairs on the contact numbers below. If you're not a member of easyMarkets, come through on the link below, sign up your account, and someone will be assigned to assist you in getting access to a dealer like myself.